They're available on Periscope at pscp.tv/Stellus Trading Floor, and also on Twitch at Twitch TV/Stellus Trading Floor, and on YouTube at youtube.com/Stellus Trading Floor. So, let's get into it. July 1st, again, it's going to be a short week this week. The Nasdaq is once again over 10,000. You can't seem to keep this down. It just keeps moving higher, and yeah, it's just really, really hard to keep this down. By the way, if you're tuning in on TikTok and you want to see the charts that I'm going to be putting up, they're available on Periscope at pscp.tv/Stellus Trading Floor, and also on YouTube at youtube.com/Stellus Trading Floor. And thanks for tuning in, David. Appreciate it. Thanks for saying hi. Just the market is just moving up strong. Again, up 0.96%. The S&P is strong. The only thing, there's a little bit of fall off on the Dow Jones. That's moved down a little bit. But otherwise, we're up. So let's just look at the charts. As you can see with the spider, this is the daily chart. So usually I'll show the weekly chart, but we have a bounce, and they have the bounce off the 50-day moving average. So there you go. It's moving up, and it's moving up strong. Now, here's the thing. There is a little bit of decrease in the volume on it, but it is moving up strong. So it seems to be that we seem to have, at least on the spider, which covers the S&P 500, we seem to have some resistance. So we seem to have a floor here, and it's moved up very nicely off the floor at 310. Now, we were seeing a little bit of a floor at 300, so it seems like it's moved up above that for some reason. Even with all the problems with the reopening and the coronavirus and all that stuff, it just seems like parts of the market are keeping higher. So it's just amazing. The real story here today, I think, is the QQQ Trust. It just seems like the NASDAQ 100, which the QQQ covers, just continues to have power. I mean, people just want to be in these stocks. Now, here's a very interesting thing. Tesla, which went up tremendously today, and I'm going to show you that in just a second, went up tremendously today, is going to become part of the S&P 500. Now, this is very interesting because when a company like that becomes part of the S&P 500, many of the funds that cover this, for instance, the Spider SPY, they will have to buy Tesla shares. And that's because they have to have the stocks that represent the index. So we are going to see increased buying pressure, believe it or not, on Tesla. I had a call option that I had sold for expiration tomorrow, 1,000 call. Well, it was moving up so quickly, I bought that back, and then I've sold it longer at 1,200. So I have a 1,200 call right now on Tesla. It just seems to be moving ever higher, and that part of the reason is it may be included in the S&P 500. Now, when this slide was taken, the Dow Jones was up a little bit. It's since kind of retreated. The Dow Jones 30 is not as relevant as it used to be. It's not as relevant as it used to be, but it is still pretty relevant. It has some stocks in it. It is down a little bit. So if you're looking to the Dow stocks, that's Boeing is the biggest one in there. You might want to possibly look at the stocks that are in the S&P 500 because this is only 30 stocks in the diamond, which covers the Dow Jones Industrials. So I want to show you before we get into the questions, and thanks so much for being with us. It's going to be a short week this week. Tomorrow is the last day of the trading day. The holiday for the New York Stock Exchange is on July the 3rd. It's the Friday before the July the 4th holiday. And so the exchanges, at least the NASDAQ and the New York Stock Exchange, are going to be closed for the Friday. So I do think that people are getting in at the last minute. Now, here's a stock that I've been featuring. I featured this yesterday. I think it's really, really worth your take a look on it because it's setting up extremely nicely. This is a stock called Ping. It's Ping Identity, and it is very strong. It is number 2 in the software security space, which is increasingly becoming important with the work-at-home economy. Many companies are having to secure their networks, and Ping Identity, it's sort of a no trust thing. It looks to exactly which it looks at exactly the IP address of everything that's on there, and it challenges each one. So it's doing extremely well. It is at 3266 on this morning. I think it is going to show some strength, and you might want to watch this one because it has a 94 relative strength. That means it's in the top 6% of all stocks. It's well above the 40-day moving average, and it is being acquired by many of the funds. Now, here's the thing about it. The volume is a little bit light at 481.9. I like to see volumes typically in the million range, but this is essentially a growth stock. I mean, it's been around for a little bit of time, but it is still a growth stock. So it is just coming into many of the portfolios. This is how I like to invest. I like to see where the big funds are buying, and then I kind of swim along behind them just like a little minnow, watching where the whales are getting all their good stuff. Now, here's a stock that I am trying to buy currently. I have a limit order in on at 51.93. This is one you want to take a look at, PCRX. It's basically breaking out, and I love to buy breakout stocks because typically in the weeks following the breakout, they typically go up significantly. This had a gap up on Monday, and then it has just shown strength. It's readjusting a little bit. I have a buy order in on this one at 51.93. Now, I sent out an action alert, so you can see this one. It's in the biotech space. It has a composite rating of 98, which I think is excellent, and it has shown some very nice institutional involvement here. Now, one of the things I want to point out to you, if you'll notice the difference between Ping, the last slide I showed you, and this one has a lot more volume, 915,706 shares changed hands. And so it is basically right in the sweet spot. It has a cup with handle, and then it's extended. The buy range is 49.46 to 51.93. It's an almost perfect cup with handle, which is the strongest of the chart patterns, showing it potentially moving higher. So as hard as that is to believe, I think this one is going to move higher. It's up a little bit today, 18 cents for a 0.34% up, and at 52.65 when this was taken. So this is one you either want to watch list or possibly put on the pattern. Now, I wouldn't buy this one above 51.93 just because that is the extension of the buy point. Typically, when I give a buy point, there will be a range that it's acceptable to buy it in, basically from the buy point up about 5%, giving you a range in which you can successfully buy it. Why do you want to buy in this buy range? Because no stock goes up straight. It will readjust, and you want to be in a situation where you are in the optimal in the optimal buy range where the support is. So if it does fall when it's moving up, you won't be in a situation where you have to sell. Remember, always when you buy a stock, put in a stop loss, and I typically like to set them at about 7% of a potential down from where I bought it. So for this case, to find the stop loss on this, if you buy it, you'll take the amount that you price that you bought it at, multiply that times 0.93, and that will give you a 7% stop loss price. And you just go good to cancel. Don't do it just for one day, because that will not work the best. Okay, so let's see. So I want to also show you another stock that I am currently trading. I'm in the stock currently. It's Veeva Systems. Now, what Veeva Systems does is a very interesting stock. It is in the biotech space, but it's a software company, so that's very interesting. basically what they do, and this is a weekly chart on them, is that they, in drug discovery, which is going on for this coronavirus thing, they provide the software that basically moves the product through the trials and all the regulatory process. About 85% of all the drug manufacturers in the world now are customers of Veeva Systems, based in Pleasanton, California. And this one has been a very, very strong performer, and it is up. I will show you in my portfolio, the ones that I have anyways. I don't trade all that many stocks. I try to trade only the best ones. And here it is in my portfolio. I own Veeva, and I've owned it for about a week or so, waiting, and it showed a very nice chart pattern. That's why I bought into it. Currently, as you can see, on July 1st, I have a limit order in for PCRX just because the chart pattern is so strong at 51.93, which is the top of the buy range. Now, I would have liked to have bought it lower, but I just didn't get the order in on time. The next slide I want to show you, and then we'll get to the questions, is this probably my biggest holding currently, and that's Tesla. As I indicated yesterday, well, actually, I've been on this for about this whole week. I bought my Tesla shares right before this breakout. My shares I purchased this is like the 5th time I've bought them, because I buy and sell them. I bought at $9.97. Of course, it broke out today. Kind of expecting this. They had some very good news. And by the way, Tesla is now, by market capitalization, the largest automobile company in the world. It exceeded the value of Toyota, which up until very, very recently was the largest company in the automobile space. Now, interestingly enough, Tesla is worth more than General Motors, Ford, and Chrysler combined. So that's kind of amazing. You can see that there's a big vote in the market for electric vehicles. The problem that all other manufacturers have, Nikola included, is that they don't have access to the batteries. So this is an area that Tesla has been very strong in. They put out their superchargers so that they have a nationwide network of charging stations that nobody else has. And they also have the capability of supplying the batteries. So this is a very interesting, this is a very, very interesting thing. So just wanted to point that out to you. I think that we're going to probably see this trade up to about 1,200. From there, I don't know. You can't really say, but this is a classic breakout, and it's pretty interesting, at least from my standpoint. But I still think that there is opportunity in the stock. I don't think we're totally limited, from the stock. So, oh, hey, David. Well, I hope that I think that you might, it's always good to take cash and sell stocks, because taking money off the table is a very good thing. I do think, though, we are continuing to be in an uptrend. I know that sounds just weird considering where we came from, but at least as far as I can see, in some stocks, not in all stocks, but in some stocks, I think we're continuing to be in an uptrend. And when the market is moving like this in an uptrend, and I want to show you this chart as well, when it's moving in an uptrend, you want to be a little bit more invested than you would if it is in an uptrend under pressure or a downtrend. So let me just show you this slide, and this is the first slide I always show every day pretty much, and that is the market direction. The key level the key level that has been moved beyond here is 10,000. Now that the NASDAQ has moved beyond 10,000, it's probably going to go higher. There was resistance at 10,000, and this is what's so incredible. So I don't think necessarily we're into this market rally. Now, here's the thing. There's certain areas of the economy that I just think are really in bad way. One of them is the hotel stocks and the airlines. I think that they're relatively dangerous because of this coronavirus thing. So it's really, really hard to say. And this is a really good question, Arnold. Arnold Pena, by the way, for everybody on TikTok, it graces me with taking a look. There's a few people that are looking. I think there's about 8 people looking on my broadcast, but hopefully there'll be more. But thank you so much, Arnold, for taking a look. I do think that there probably will be a pullback, but right now the sign is there is no pullback. As hard as that is to believe, I mean, I am just floored by this because you would have thought that there would have been a pullback, but the fact that there is this very strong support in the Nasdaq at 10,000, and it looks like it's going to stay there. I think that we may be in a situation where it continues to go higher. So if you have, here's the rule. We're in a fairly late stage, so when it pulls back, it will start to pull back, but it's not pulling back yet. So here's the thing: if you have a stock and it is gone down 7% or more, sell it. Absolutely, get out. The house is burning. You don't want to be in the house. But there are opportunities right now as the big funds move their money from, I think, primarily what they call the value investing to the safe sectors of the market. The two biggest, quote unquote, safe sectors of the market are technology. And of course, most of my holdings are in the technology area, and I've seen tremendous increases in this. But the other sector that they're moving into right now is the biotech, pharma, healthcare area. So anytime I see a stock that has a really good chart pattern that's potentially breaking out in this area, that's where I want to concentrate, because there is a rotation going on in the market to these areas. Let me just show you this chart of one, and I sent this out on the trade alerts. And by the way, if you're looking on TikTok, you can get my trade alerts. I send them out. I try to send them out. They're always daily, but I usually will have one or two in a week. And this is the chart pattern that I really like. It's a cup and handle. It is very, very strong in terms of its potential. As you can see, it's broken out. This is that line up here, and it has then gone up, and then it's settling right here. But this has a lot of very, very strong buying pressure. And the reason this has buying pressure is because it is a top-rated stock in a top-rated sector in an area that money is flowing to. And this is a very important thing to remember. As the money flows to the biotech and the healthcare sector, that will mean that the very best stocks in the sector will typically break out. And this is the case here. Now, can I guarantee that it'll go higher? No, but here's the interesting thing. As you can see, right before the down draw ending on March 23rd, this stock was about at $50 a share. It has exceeded that on a very good chart pattern. That is a very good sign. That means potentially this is probably going to go higher. So those are the kind of stocks that I like to buy, and I especially like to buy them in those chart patterns. Okay, so let's see. Have you seen what CEI was opened at? Okay, let me see if I can. Oh, wait a minute. Let me go back there. All right. Let me see if I can. Some other questions. CEI from the late 2000s was crazy. What do you think about eBay? Oh, one of my favorite stocks, actually. So let me just show you on eBay. I really like eBay because eBay, even though it's kind of gone through some issues, I think it's in a very, very good area, and it's very strong in terms of its fundamentals. It's in one of the best categories, with Amazon being the very best. But Amazon costs $2,700 a share, and Facebook and eBay is much less than that. So this is something you want to take a real look at really hard. I totally approve this stock. Not that matters. I mean, I could approve something and you could say, you're full of hot air, but I like this chart. It's not a perfect cup and handle. Okay. It's basically, it's not really in a breakout mode, but in terms of a long-term own, the chart looks good. So let's go to the weekly chart. I kind of want to blow this one up and kind of go through the chart to show you why I would probably, be a buyer in eBay. So if you're looking for a stock that's probably going to move, this is not a bad place to be. This is the weekly chart. The reason I shift back to the weekly chart is because it typically will smooth out the ups and downs, and it gives you a better in terms of where the buy points are. As you can see, that gapped up here about a week ago, about 3 weeks ago, and then it retreated a little bit, and then it's come back, and it's making a new high. So when a stock is making a new high like this on a very good chart pattern, which this is, I think that this is well worth it. Now, here's the thing also that I want to show you on this chart. And by the way, if you're on TikTok, you can see these charts if you switch over to Periscope, pscp.tv/Dallas Trading Floor, or potentially on YouTube. And by the way, if you go to YouTube, you will see this recording after it's finished. So they archive them there. Had a little bit of trouble in this the morning starting the broadcast. I had an issue with Facebook and I wasn't allowed to connect. So this will definitely be on YouTube if you want to take a look at it later. The 40-day moving average, as you can see, this is the eBay chart, has moved above the 200-day moving average. This is very, very bullish. When you see this kind of action on a chart, that means it's potentially going higher. Now, that happened right basically at the beginning of June. So throughout June, we've had some really nice action on eBay. I think that, if you're looking for a good stock that's probably going to move up higher towards the end of the year, I think that eBay is definitely one you want to be looking at. It has a composite rating of 96, and it's number 5 in one of the very, very best groups. Amazon, in the retail internet group, is number 1, but eBay is number 5, so it's definitely worth looking at. Here's the thing about that. As the techs have continued to do well, the funds are increasingly having difficulty placing their money in tech. And one of the reasons is because Amazon, though a fabulous company, is just really too expensive. So they're going to have to put the funds elsewhere. eBay has been a laggard for quite a while, but now it's making new highs and it's very worthwhile. It's also up after hours 2 cents, not a lot, but I do think that the chart looks really good for eBay. Thank you so much for the question. Really appreciate it. I think that eBay is definitely something, at least for right now, that is, really going to probably work very, very well. So, okay, I have got another one of my favorite stocks here. I'm currently not in it. I'm trying to find the right chart pattern to move into this. This is called the Trade Desk, and for those who you don't know about this stock, with the issues that Facebook has been going through, with some of the advertisers having pulled their content, the Trade Desk is going to take over from that. And the reason is because the Trade Desk allows you to sell advertising on other platforms besides Facebook and Google. So this is kind of becoming the third way that people can buy placement in the advertising business. So this is just tremendous. It's up $23 today, just phenomenal. As you can see, excellent chart pattern. It's got a 99 rating. I think that, I would have liked to have bought this one, of course, right below 400. It was 400 basically on Monday. I didn't get into it. I was too busy trying to figure out how I was going to acquire more Tesla at the time. But this one is just tremendous, up 5% today, or $22. Just a tremendous thing. And basically asking to sell or hold. You know what? I would hold this one. I know that I don't normally say that, because here's the thing. If you're up more than 20% in the stock, sell a portion of the stock to pay back what you have invested in it. Now, I suspect that's not the case here, but this is a hold. I do believe that this is a potentially, I think this is going even higher based on this chart pattern. I'm taking a look at the chart. Now let me give a full screen for the chart on this one. And I kind of want to go over that just really quickly because I think this is really a good chart. And I think this is a really good company. Now, many times the best companies are very expensive. I know that's sort of a bummer, but in this case, let's look at the weekly chart here for this one. Here's why I like this chart. Take a look at this chart. Take a look at this chart. It doesn't get much better than this in terms of a chart pattern. You're seeing it move very, very, very nicely from, the chart pattern is up. You have a break in the 40-day moving average above the 50-day. That's extremely bullish. You have a 97 relative strength, and you have huge up volume. So yeah, I'd be a hold on this one. I would be a hold on this one. Thanks so much for the question. This is one of my favorite stocks, by the way. I think you just really are on the right track with this one. It's just excellent. And Arnold, Amgen, another company that I kind of like. I haven't really looked at the chart at Amgen for a while, but Amgen it's definitely, we're definitely seeing a lot of investment right now in the in the biotech space. And of course, Amgen is one of the granddads of this sector. This is a great sector to look at opportunities in. Wow, it's up $19, just incredible. Look, and this is why I want to show you. This is a really, thank you so much, Arnold, for spotting this. This is a very interesting chart. Here's why I find this extremely interesting. And hopefully, let me see if I can blow that up a little bit so everybody that's watching on Periscope, YouTube, and Twitch can see this. I think this is something you want to definitely look at because it's a very interesting chart. I'm going to go to the weekly chart because that gives you kind of the best. It makes it a little bit possible. This is a gap up here, by the way, folks. As you can see, this is the weekly chart now. It has moved up and down on the 40-day moving average. The 40-day moving average was crossed, and that this cross to the upside is very bullish. Now, if it goes the other way, it's bearish. So be very careful on this. But when the 40-day moving average goes above the 200-day moving average, that's very, very bullish. And indeed, the stock has moved up. Now, it is gapped up today. What is happening? Why is this happening? Well, I think, and this is just my theory on this, I don't even have any facts because I have no insider information, but what's happening is capitulation on many of these funds. Many of these funds have been trying to do value investing, the Warren Buffett style investing, which worked very, very well when it wasn't such a weird market, and they have not done well. So they are moving their funds into the healthcare sector. Amgen is one of the biggest of all of the biotech stocks. So, and it's really sort of the granddad. And I think that it's really worth you looking at. It's a little bit expensive, but I do think I wouldn't necessarily buy it, and I'd want to see what the settle would be on it. But I think you typically don't lose by buying stocks that gap up. Now, you don't want to buy them until about 2 or 3 days later because usually it'll settle down. But then with the gap up, typically that's a very, very strong indicator that it's going higher. And thanks so much for that, Arnold. So appreciate it. Great question. Really appreciate that. Okay, so let's see. Do you recommend buying options call at strike price? Okay, that's a good question. All right, now I'm just trying to figure out what stock we're talking about here. What is your thoughts overall market trend for the next 2 to 3 weeks? Really hard. It's funny. Predicting market trends is kind of like predicting the weather. It's very difficult, but here's the thing. The funny thing is weather is relatively easy to predict short range, and the stock market is just opposite. Longer range is easier than shorter range. But let me go back to the slide that I have on the market direction just to see kind of, and just go over that again because I think it's pretty instructive in terms of where the market is headed. And let me see if I can pull that up here and give you that. Okay, basically what we have here on that is that the market just continues to move higher. I believe that the market in the next 2 to 3 weeks is probably headed higher, based on the fact that it seems like the threshold, the 10,000 threshold, has been it's moved past this 10,000. There was some resistance at 10,000. It looks like it's breaking through that. So it's been up and down from that for the last week or so. It's moved past that. I think it's going higher. So I do think the market direction, as hard as that is to believe, and I'll be the first to tell you, if I think the market direction is going against, because I will be out there shorting like you read about. But for right now, at least for the near term future, I think we're looking at a market that is potentially headed higher, if that can be believed. Now, will it be shared amongst all of the stocks? No, absolutely not. Some of the stocks are just going to get hammered, and I want to show you this and show you stocks not to buy right now. And the one at the top of the list, unfortunately, is a stock that I should like this stock. I love the airline, but I just don't think this is the place to be. And this is AAL, American Airlines. I want to show you why you should not necessarily buy the airlines or the cruise ships. I'm going to shift over here to this chart and look at it. Everybody, about a week or two ago, everybody was like very excited about this. A lot of people on Robinhood, not to criticize anybody on Robinhood, but they were saying, "Wow, I know American Airlines. I've heard of them. They're a great airline. I want to buy them." Well, it's just not working out that well. It not only was it down 2% today, and it's down after hours. I don't think it's going to go any higher. Why? Because we have a situation. And I want to show you the weekly chart here, and this is the important thing. I want to show you why you potentially should not be in this stock. Well, I can show you exactly why. And that has to do with the chart pattern. And it has to do with the way, yeah, there we go. Okay, do you see how this is the 200-day moving average here? I don't know if you can see this. It's, by the way, if you're on TikTok, you can take a look at this on Periscope at pscp.tv/Dallas Trading Floor. But first of all, the chart is going in the wrong angle. It's going down. Also, the 200-day moving average is above the 50-day moving average. That is a very bearish sign. As you can see, the time to get out of the stock basically was, believe it or not, and you're going to get so no way, but the time to get out of the stock actually was June of 2018, and it's just not been better since, because that's when the 200-day moving average moved above the 40-day moving average, and this is a very bad sign. You don't want to buy a stock when the red line here, which represents the 40-day moving average, is below the 200-day moving average. It's just not going to be a very good deal. By the way, also another thing about American Airlines, and this is kind of showing what not to buy. I don't like to be negative, but I don't think that if that's why you want to be careful. You want to buy a stock at a higher high, because higher highs typically show that it's going to move higher, and a lower low, even though it may be quote unquote a discount, that may not be so great. It may not be a discount. So that's one of the reasons why, instead of buying a American Airlines, take a look at buying something like an eBay, which is a very excellent company. It's number 5 in one of the best categories, Amazon being number 1. Now, of course, it would be great if you could buy Amazon. The problem with Amazon, of course, is it's $2,700 a share, and it's probably going to go higher. So, what I'm saying is that the two areas of the market where the funds are putting their money are tech, of course. Everybody knows about tech. And then also in the biotech area. That's one of the reasons why my trade alert for today is on a stock that is moving very nicely off an excellent chart pattern. Now, can I totally foretell the future? Absolutely not. I can't do that. But I do know that if you bet on better, surer deals with better chart patterns over a long period of time, you will win. And that's definitely been the case with me. So here's the thing when you have an excellent chart pattern in an area that's being accumulated by the funds, like the biotech area, then that's where you want to go. Now, are all biotech stocks good? No, they are not, because there's so many of them and it's a very tough area to play in. So you want to find the ones that are more established, that have revenue, and definitely it can be a good place to go. And so that's just kind of my take on that. All right, so can you suggest MongoDB call option? Wow, good question. I really, you know what? I've been a user of MongoDB. Great product, by the way. Great product. I think the symbol is MOGO. I think is that right? No, is it Mongo MOG? Is it right? No, I have to. Let's see if Mongo. No, I've got the wrong. I'm sorry, I've got the wrong one here. So let me see if I can give you the right answer here. MongoDB, MongoDB. And as you know, MongoDB has a freemium license setup, which is continually very good. Okay, this was on a. Let me give you a chart. I can't give you a call option. Oh, MDB. Thank you very much. I was fooling around trying to figure out what call would be good. MDB. I should know that. And let me just take a look at the options chain. And by the way, what I'm doing here is I'm pulling up the option chains. This is exactly where the options are going to be selling. I'm going to look out basically here. MongoDB currently is trading at 228.78. It's up very, very strongly today. It's in a pretty good sector. If you want to be in the database sector, the issue with this sector, though, I do believe it's being accumulated, is that there's a fair amount of competition in this space. So it's going to be hard for Mongo to take market share from the really big leaders such as Microsoft. But I think a safer bet in this area, to be honest, and I know it's not a very exciting one, is to buy Microsoft stock over the MongoDB stock. It probably won't go up as much, though. That's the thing. So if I was buying a call right now, the calls are a little bit pricey. The 230 call, which is the July 24th, the July 24th expiration, is selling for 1070. That's pretty pricey in my world. So let me just show you that really quickly, the chart on that, and give you an idea of kind of where I would be buying if I were in this one. I am not in MongoDB, by the way, for full disclosure. Okay, the July 26th call is trading at 1070. That's a little bit pricey. You probably want to go out a little bit further, and I would possibly be looking at maybe the August in the August time frame. I want to see something that is about at the 250 level that is affordable in terms of a call. So let's just take a look here. Okay. A better bet, I think, would be an August 7th call for $9. That's kind of high. I don't typically like to pay more than about $4 or $5 on calls like this, but I do think it's moving higher. The strike is the 245 strike, which I think is a fairly is going to be fairly high likelihood, is trading at 770. So I'd have to look at that one, the August 7th. It's a little bit short. Here's the thing. When I'm buying calls, typically, I like to have at least a month or two on the expiration of the theta. When I'm selling them, I like to sell them relatively short, a week, 2 weeks, 3 weeks, 4 weeks out. I don't like to sell them more out than that, because if I'm wrong, typically I'll get the theta decay, and I know it's kind of going into kind of the weeds here, and that will help me win on the stock. But I would look possibly at the August expirations, possibly let's see if we can get something that's a little bit further out. Let me see if we can get maybe a Yeah, we have quarterlies. Yeah, I would probably look at the August 7th, 250. Yeah, August 7th, 250. That's sort of where I'd be. So that's kind of, but I'm not currently in the stock. But it is a great company, and I actually have used the product. So I kind of like that product. Um, Netflix. Wow. I love Netflix, of course, because I own Netflix. And right now, and that's the thing. I usually like the stocks that I'm doing well in. So I'm like a lot of other people. I'll show you my holdings right now, currently, and just give you an idea of sort of where I'm at in terms of my, my particular portfolio. And you'll notice one thing you'll notice about my portfolio. It's typically very small. I don't really trade a lot of stocks right now. I'm only in 5 stocks, and these are the 5. And one of them, of course, is one of my absolute favorites. It's Netflix, and it's done very, very well. I got into Netflix basically. I've been in Netflix for about a little less than 2 weeks now. So I've seen some nice movement, 6% up, and nice change in terms of price, $28. So, it's very, very nice. I think there's going to obviously be more movement into Netflix. This is one of the really, by the way, over the last 3 years or so, Netflix has been an absolute stellar performer, and I don't think that's going to change for at least for a while, because cable companies are going to have to distribute their product, and Netflix is sort of the winner in that. And so I don't necessarily. I'm probably going to get called out because I've got a 265 call on the Netflix that I own, and that is going to be probably called out next week on July 10th. So I may be back into it. I may buy back the option as I did today on Tesla. I bought back my 1,000 option and I resold an option going further out, a little bit further out. So we have another question. Oh, this is interesting, Junki. Thank you so much for watching me on Periscope. I love Periscope. Just going to take a look at Blue, BLUE. See if I can bring that up. BLUE. All right, and get a quote on that. And I'm just going to take a look at the chart. Bluebird Bio. Okay, this is a little bit, yeah. Here's the thing about this particular, and here I'm saying I've been recommending all these biostocks. Biostocks are really, I would say, kind of difficult to evaluate because there's so many of them, and many of them are not revenue are not revenue positive, and that's an issue. That's the reason I think that you're seeing so much interest in stocks like Amgen, which are. But I want to show you the chart on this one. This is not something I typically like to see, and this is just FYI. This is a very technical analysis of it, but just based on the chart, this is the 200-day moving average. This is the black line here, as you can see, and this is the 40-day moving average. It's never really a good idea to buy a stock when the 200-day is above the 40-day. The reason for that is that means this is a downward trending line, and here's the thing, and this is very simple, but you want to buy at new highs and higher highs. You don't want to buy something that is in the retreat mode. And right now, even though other things, this is in the retreat mode. If you're not in the stock, I wouldn't recommend it just because of the chart. I think it's in a very good area, but I don't like the chart. If you're interested in investing in the biotech space, but want to get a little bit more safety, and I think safety is really important here, you might want to look at the iShares Biotech ETF. This is a good one because it basically has a portfolio and it's trending higher. This is definitely the kind of thing that you might want to do to limit your risk a little bit when you're getting into biotech. I do think that biotech has a very strong has a very strong year. It's going to have a very strong year this year. So might be an area that you want to be in. So let's look at the weekly here. The reason I'm showing you the weekly is because it kind of smooths it out and you can see the long-term trends better. If you'll notice, the 40-day moving average is above the 200-day moving average. This is very bullish. It's turned positive basically about it's been positive basically for about almost 6 months now. Well, more than 6 months now. In December of 2019, the 40-day moved above the 200-day, basically starting the sell signals. It did retreat when the market went down, but it's at new highs. This is something, if you want to be in the biotech space, and it's kind of a, set and forget type of thing. IBB, might be a good one to take a look at. So let me go back to TikTok here. What do you think of eBay? Well, I covered a little bit before on eBay. I am very bullish on eBay. And the reason I'm very bullish on eBay is because of the way the funds are investing. Typically, what I like to do in my strategy is I like to see kind of where the capital is moving to. One of the areas that the capital in the market right now is moving to is big tech. But the problem with big tech, in many ways, is that the big leaders, the Amazons of the world, already are very heavily invested. So there's not as much opportunity for a larger increase. So they are going essentially to some of the secondary names. And one of the secondary names that is just tremendous is eBay, because it's been around. I mean, it's been around since 2000. It's almost a 25. It's almost a 25-year-old company now. Hard to believe. God, I'm getting old, but it's a tremendous company. There's so many people, so many small businesses sell with eBay, and I just think it has a really good future. So I'm very, very, very bullish on eBay. And hey, thank you so much for this question. I have owned BioMarin. It is an excellent company. The thing about BioMarin is that it just continues to be good. Now, for everybody out there, I want to explain what BioMarin is. It is a biotech company. It is the best of all the biotech companies in terms of its chart. And what it does is that they are specialists in creating drugs, what they call orphan drugs, for the pharmaceutical industry. They really have very little competition. It's up strongly today. I want to show you this chart, but I want to show you this over on the weekly chart because I think that's very telling. And this is the BioMarin chart. So let me pull this up here so that everybody can see. And by the way, if you're on TikTok and you want to see the charts that I'm showing, it's available on YouTube at youtube.com/DallasTradingFloor. And of course, it's number 78. That's the one. And also, like right now, live, we're on Periscope at pscp.tv/DallasTradingFloor. So you can see this. This is the chart of BioMarin. And by the way, in the biotech space, BioMarin is number one. It has the highest composite rating. I think it's a 99 composite rating. So let me just see if I can. Yeah, it has a 99 composite rating. Folks, it doesn't get any better than that in terms of a composite rating. And a composite rating of 99 is extremely powerful. That means it's in the most elite group. It goes from 1 to 99. Now, remember when I showed you just recently the chart of American Airlines. American Airlines had a composite rating of 1. This is the reason why you do not want to invest right now in the airlines, because they just aren't going good. A composite rating of 99 says that it's probably going to go higher. And indeed, that is the case. It is up today $1.82 a share, or about 1.47%, and it closed at 125. And after hours, it's not going to trade that much. Here's the thing about BioMarin. It's not a huge company in terms of the number of shares stated, but it's creeping up, and the volume is good at 2.1 million shares, and it's up 28%. So definitely the funds are acquiring BioMarin. So if you have the money, this is not a bad place to be in the market. I do think it's going to go higher because, as we say, the funds are basically moving from value investing, and those are the Dow stocks, the Boeings of the world, and they're moving that into the two areas that seem to have the most resilience. And the two areas are, of course, big cap tech, and we all know those names, and then also the biotech and the healthcare industry, especially the biotech, and that's where the money is moving. So these typically can be very, very good, and it's a trend that we're looking at here, and so this is a trend, and this is one of the reasons why one of my trade alerts today is on a company PCRX, which is moving higher. It's gapped up off of a very, very strong chart pattern, the cup with handle chart pattern, and it's not quite as strong as BioMarin. It's only a 96, which by the way is great, and BioMarin is a 99, but it's a lot cheaper. BioMarin is 125 a share, and PCRX currently is trading at right above 50. And so hopefully my order was filled on that, because I do think it's a winner. So let's go back to TikTok. What are your thoughts on binary trading? Well, you know what? I love binary trading. Now, for everybody out there, what binary trading basically is, and the way to do binary trading is with options, I believe. And one of the biggest opportunities is coming up now for binary trading. Well, what do I mean by that? Well, here's the thing. You should Google this online, and hopefully I'm going to try to make some videos on this. There are what they call a bull call spread and a bear call spread, and a bull put spread and a bull and a bear put spread. Okay, here's what they do. Basically, with a bull call spread, what you do is you look to see a stock that you think might have a binary action. Earnings are a very good catalyst of these binary actions, and what you do is you buy you buy options on both sides of this. So if the strike price, let's say the stock is trading right before the event, which is the earnings event, is trading, let's say, at 50, you want to go in and look to see the next expiration, and you want to see what the calls are trading for. You want to sell the lower call and then buy the upper call. And if there is a movement, and this is kind of hard to explain, I'm not explaining it right, I don't think, you will capture the premium on this. This is a limited risk trade, and around earnings time, I do this all the time on stocks that I'm bearish on and stocks that I'm bullish on. I did quite well on Apple in the last trading on this one, and you can use this very effectively. It's sort of like, I kind of view it as free money. It's a little bit different trading style, but binary trading, it really works, especially on earnings. So hopefully when we come into earnings season again, I'm going to emphasize in sort of how you do this kind of trade. By the way, everybody, if you want to get these trades and more information, sign up for my free trade alerts. It's at dallastradingfloor.com, and just put in your information, and it's free to subscribe. You can cancel anytime you want, and basically it helps me because it forces me to create trades that I'm doing anyways, and then share them with everyone. So hopefully some people can benefit, and hopefully I'm right, and I've had a pretty good track record on this if you keep track, and hopefully I'm going to try to put track record up, which will help people going forward. I haven't quite figured out how to technically do that, but I'm working out the technical bugs as we speak. I dropped Facebook today. My feed didn't quite work, so I had to start late. So if you're looking on YouTube, you're going to see that that my feed started late, and that was because of my problems with Facebook. Anyways, so do you recommend buying options call strike price 65? I don't know what stock. Okay, stop. Okay. Oh, hey Jim. I think Luckin Coffee is going up. Here's the thing: if you're out of Luckin Coffee is radioactive, folks. I know that a lot of people were in it. Here's the problem with a lot of stocks that are Chinese based. You just don't know you just don't know how they're going to trade, because you can't really rely on their fundamentals. So let me just take a look at the Luckin Coffee um, chart. Now, this is something that's probably going to be changing here fairly quickly. Up until, yeah, there we go. Okay. It says, yeah, Luckin Coffee tries to clean house amid new evidence of fraud. So it looks like they're trying to rectify the problem, but LK is the symbol on this one. So let's look at the chart on LK just for fun. I wouldn't be in this one just because I don't think it's, it was delisted. Oh, I'm sorry to say that. You know, it may be going up, but it doesn't look like you can buy it anymore in the United States. It looks like it was delisted. So I probably don't want to be in Luckin Coffee. I hope you didn't lose any money on that. But this is one of the major reasons you always want to have that stop loss in there, so that if there's something that you can't foresee, and this is definitely was the case with Luckin Coffee, you can get out of it. Okay, so buy the basket and hold. Yeah, well, okay. It's I think that especially in the biotech space, I think that this is the way to go in terms of buying a basket of biotech companies. The reason is because biotech in general is a very strange animal, because it tends to be very, very much stocks tend to be lose money until they come out with something, and then they get acquired and they make a whole bunch of money. So it's very hard to buy them if you don't have a portfolio, and it's very hard to be right. So this is a way you could do that, and then that is basically by buying the IBB, and this is the chart for the IBB that I have up there, so that we can see that. And there we go. It's this is called the iShares Nasdaq Biotech, and I think this is definitely worth your time if you want to be in the biotech space. And I do think there's going to be a lot of follow-on investment in the biotech space, at least until the end of the year. Now, and there we go. There's the chart. This is the IBB. This is a little bit less risky way to play on the biotech, and I think people are going to do very, very well on this. Okay, well, I have. Oh, I've got another comment. Probably two more. Okay, that's great. All right, Regeneron. All right, okay, Regeneron. Let me take a look at Regeneron here, real quick. I haven't been following Regeneron, but I do know that, of course, this COVID-19 thing, they're likely to be very successful in this area. The other stock, of course, is Gilead Sciences, which I also think will do quite well. But biotech in and of itself is a hard area to invest, because, again, you have so many companies that are basically burning through cash, and then they may be very successful, but they may not be. And this is Regeneron Pharmaceutical. It's tremendous. Yeah, 609. It's off $14 today. It's 99. Yeah, this is at the top of its. Yeah, this is in the medical biotech, Biomed Biotech group. They're splitting this group off. BioMarin is the number one in the, the biotech group. They're starting to split this out. But Regeneron 609, it's down. You know what? I don't know if I would buy this one directly. I think it's a great stock, but there's an easier way to do it, and that's with the IBB. I think you're gonna like that way of investing on it better. It's just a little bit safer than doing it, doing it this way. Okay, so what about ETFs leveraged at 3 times exposure? How long do you think the run is going to continue? The TQQQ. Okay, the TQQQ, by the way, there's 2 companion stocks, and I want to talk about them. And that is, there are 2 companion stocks that really that favor direction, and on the NASDAQ 100. Now, the QQQ, I always show that slide, is the NASDAQ 100. So that's basically what the NASDAQ 100. There are 2 other ETFs that you can use for directional. One is the SQQQ, and that shorts the QQQ index. And the other one is the TQQQ, which is bullish on that. So here's the thing. I don't think you want to go on the TQQ right now because of the volatility. I didn't put a volatility chart up today, but I think that, at least for me, I wouldn't be in the TQQQ. These are technical trading opportunities that when there's a change in the volatility, that's really when you want to be in them or be out of them. There hasn't really been a change in volatility in this market that much. So those are more a volatility instrument. But again, you can make tremendous money on the TQQQ. The only thing about the TQQQ is set your limits and watch them carefully, because they can turn around like you read about. So thank you very much, everybody. It's been an hour, and I've totally enjoyed it. Always do. And if you would like to sign up for my trade alerts, and you're on the TikTok platform, you're watching me on TikTok, you can do that by going to my profile, hitting on that link. It'll take you right to a sign-up page, and of course the alerts are free, and you'll be receiving them as I trade them. So it can be kind of fun to take a look that way. So I'm going to be signing off on TikTok, but again, if you want to get the trade alerts, go to my profile, hit on the link, and just fill in that, and you'll get the trade alerts right away. And I will be back tomorrow at 2:30 to 3 Central Time. Now, I won't be broadcasting on Friday because that is a market holiday. So for everybody on TikTok, we'll see you tomorrow at 2:30. And for everybody on YouTube, Periscope, and Twitch, thank you very much for stopping by and taking a look. I'm going to try to answer if there's some of the questions that I can answer offline, I can do that too. And the easy way to do that is to just write me. I have a comment section. I don't, I'm kind of, I try to get to them as quickly as I possibly can, but I want to show you that on the screen here right now. It's DallasTradingFloor.com, and both you can send me a question that way through email, or you can sign up for my trade alerts, and hopefully I'll answer most of these on the show as well. So I so appreciate your questions. You're really helping me out with becoming a better trader. I'm going to try to provide on my flash alerts some what I consider to be very good trading opportunities. Thank you, everybody, and I hope that stay safe. And I will see you tomorrow at 2:30. And so just stay safe. We're coming into a very good time to make money. And if you want, get my trade alerts. They're free. www.dallas